Hello, and welcome to the October Commonwealth Market Update. My name is Brad McMillan, Commonwealth's Chief Investment Officer. It was a tough month for the markets. All three U.S. indices were down for the month, taking away half or more of the gains for the quarter. Where the damage really hit, though, was in international markets. European and other developed markets were down for the third month in a row, and emerging markets, although they were up for the first 2 months in the quarter, actually got hit hard enough to take the quarter as a whole into a loss. Equity markets really suffered this quarter, not so much in the U.S., but around the world. And there's a reason for that. The reason is an increasing appreciation of the risks out there. If you look at Scotland, for example, it raises a number of issues. The Scottish independence referendum meant that not only could Great Britain break up, but if Great Britain broke up, so could any other institution, such as, for example, the Eurozone or even the European Union itself. Second of all, we've got continued economic uncertainty and risks in Europe. The sanctions on Russia for its actions in Ukraine, which continue, by the way, have done tremendous economic damage, not just to Russia, but also to Europe itself, and that continues. The worse the economy gets, the higher the political risks get, and that in context with Scotland really is a systemic risk to watch for. Beyond Europe, we also have the ongoing troubles in the Middle East. We also have a real estate deflation phase kicking in China, which the government is actually not addressing, at least yet. This is new. So all of a sudden, we have a very real focus on the real risks that are out there, something that the markets haven't really been paying attention to. I think that's a big part of why we've seen these declines. The other big part is that the fundamentals have declined. Earnings expectations, the expectations of how much companies are going to make, have actually come down by almost half for the quarter over the past quarter. So investors are looking not just the world, but actually companies and saying, you know what, maybe we're not as optimistic as we were. And we're going to continue to see some kind of price adjustment to reflect that. Which is interesting because the U.S. economy is actually doing quite well. We've seen some concerning indications, for example, last month's new jobs figure. But the thing is, that was an anomaly. Everything else was much more positive. We've seen some other concerning data points as well, but again, in the context of overwhelmingly positive information other than them. So even as the recovery continues, markets are starting to pull back a little bit. And I think the reason for that is markets have largely been priced for perfection. This pullback, if it continues, even if it continues, is actually a good thing. It's a healthy recalibration of where we sit. Because the thing is, looking at the market action at the end of the month, it looks like we will be having some more turbulence in October. Shouldn't be a surprise, shouldn't be alarming. At the end of the month, we just broke the 100-day moving average, which is a sign that indeed we might see some more. I'm not concerned about it in the long term, but in the short term, we could be in for a bit of a rough ride. Thank you for joining us, and I look forward to speaking with you next month.